All right, good evening. Welcome. We'll just give it 30 seconds or so, and then we will begin and start discussing crypto TradFi, linkages, correlation, decorrelation, strength, weakness, divergences. Hard pick between CBS or the President of the United States. I don't know. I don't know about that one. I think it's pretty easy, right? Yeah, microphone sorted today. Internet connection sorted today. Finally got through a lot of stuff. Yeah, I'll be back in a bit. Yeah, nice try. Nice try. Yeah, the yeah, that like the house moving process, that's not a great thing. Well, I mean, it is a great thing. It's a fantastic thing, but I don't think any amount of pre-planning prepares you then for the shit that you start doing once you're in. And it's been a good while since I moved house last, so kind of forget about all the pain points that come with it and all the things you forget about and all the delays and yeah, various other shit. Yeah, I got invited. I declined. You're right. Absolutely right. I basically, like I just said, look, it's going to take me too long to get over there. You know, just like fill me in on the phone. You know, just give me the lowdown now. Yeah, the house move got in the way. That's the problem. Okay, so we'll take a little quick look through the markets, and another week that has been red, another week that has been kind of prevailing weakness on the majority of markets. And we've just come up to the close, and the Nasdaq has just about recovered in terms of getting back off the low and having a good reaction sub 20K. Which is a nice round number, significant milestone number for it to run. So pretty decent reaction on the downside. And we've also now got the build up here of the 4-hour divergence still in effect, primarily in effect on the Awesome Oscillator. Technically losing the last low here, but having a good reaction for that 20K sweep. And I think probably kind of most of the concern now will revolve around structure side of things up here. And we're in this position where the low is now lost. So this is what we've been looking at from a higher time frame perspective, with a continued divergence, the confirmation of the divergence that we've now got here on the weekly as well. So continuing that kind of momentum shift. And we've now got the RSI in a place that historically for the last 2 years, it has bounced from every single time. We would hope that would be the case. But unfortunately, based on the close that we've just had, it looks as though we've got our low lost through here, just like we had back here in 21. So we've got that low that has now been officially lost. And that means that we're probably in this corrective territory. I think this level is actually a pretty good one to keep up on the chart, 20,800. We saw that last time the weekly low was lost, it was actually the resistance point then for the market trading back to the upside, both in the short term here, just 2 weeks after the low was initially lost, and then also trading back into it around 8 weeks later as well. So hopefully this level will be pivotal to us. Is it going to play out the same as before? Highly unlikely. However, we are setting up in that negative structure through here now. And like we said, this isn't a good look for the indexes now. It does set the way for this divergence to now play out. The divergence hasn't played out at this moment in time. The divergence is still on the cusp and the wave of playing out. And we are not seeing any sort of downside impulse that we would be comfortable or confident is representative of a weekly bearish divergence playing out. And a really good example of that actually is on CHWY from a crypto perspective, just to kind of highlight what I mean about divergences and playing out through here. You get this, and this is probably a bit better if I go for this just as like a clean angle. And so you can see here what we do across the highs all the way through this market here is we just drop momentum, okay, which is largely what's happening on the indexes, just on a bigger scale or a higher time frame through here. And then what we do is we end up getting sell-offs that are like this. Okay, they're like this. 30% significant move in the market, less significant potentially from a crypto perspective, but a 30% sell-off. The divergence continues, and then you start to get playouts that are more like, even if we take it from the high down here, 35% sell-off. But if you take a look in terms of the position of the RSI at these points in times and the position of the Ostium oscillator, they actually tell you something quite important about divergences through here, which is that when you get to this point of what has been aggressive selling and is 35% away from the high, you haven't yet actually crossed over anywhere. Okay, so you can see through here, we haven't yet crossed over. We haven't crossed to the negative side of the AO, and we haven't broken down past the 50 on the RSI. Typically speaking, from a divergence playout perspective, especially on divergences that have some length of time to them, like these ones do, you then expect to see what we would describe as like impulsive price action. So price action that is highly aggressive or more unusual to the market that is driving the price down or up quicker. Okay, and so then you get that in SUI through here, where you then start to see the real aggression of this market come in. And obviously then we get this leg down of 45% independently, which is the really aggressive smackdown that we get in the market. All right, so that's what we're looking for. And that's what we're looking for on an index front. Right, that's why when we look at this market at the moment, when we look at the NASDAQ and we say, well, this hasn't yet got to a divergence playout perspective because we're yet to see that aggression. Okay, I would... I mean, I don't hope that it comes soon because I've just taken calls today. So I'm hoping that it's at least a week delayed. But we would probably expect to see that play out within the next 6 weeks or so. Right? And again, what we're looking for, and hopefully we'll be able to clip this in the future, what we're looking for is the aggression on the downside, which is very clear and obvious that the divergence is now playing out. Whether or not, given the current climate, that's attributed to a news event, that's attributed to data, or that's attributed to Trump being bipolar, we will wait and see. But what we want to see from this market is clear aggression to the downside and confidence our weekly divergence has played out. Once we get that, then we'll have to wait for the markets to stabilize, start to form some sort of base for a reversal, and then it will be time to take advantage of all of the discount present in the market. Fingers crossed. Now, lower time frame, away from the doom and gloom for a second of the higher time frame. I think the lower time frame is actually looking pretty bounce worthy through here. You can see these lows all the way down here, and we're starting to make that continued series of higher lows here on the Ostium oscillator, which is actually a far better indication for us in market conditions like this. And so we are looking for that upside play. 20,800, that's that weekly low that I highlighted before, would be a really nice area to move back into. And so really looking for some counter trend pressure to kickstart next week. I think ideally that's what we'd like to, that's what we would like to see through here. Well, I would like to see, because I've started to take some calls on this. And the same on Tesla, you know, another very good example market. It's down 50% from the high. It's done minus 50% in 3 months. Tesla's been on a crazy sell-off path all the way down through this region. So yes, crypto's been affected, but major markets are still being affected as well. And you can see again now, just highlighting what we've been talking about on the NASDAQ, we're starting to see these bullish divergences through here on Tesla and obviously mirrored here on the Ostium oscillator. So starting to see this potential for some reversal and some counter trend view, basically. But super aggression on the majority of TradFi markets, and not particularly pleasant. And then another one, just kind of while we're on this, and we'll probably end up kind of covering off the thesis of this at some point as well, is Capital One Finance. And this is something that I've been taking a short position in, been very interested in the downside in this market and looking for this weekly divergence play out. You can see now that based on this weekly close, we've now confirmed the divergence. We're significantly far enough away from the highs in order for this to be locked in and confirmed. And now we're waiting for whatever impulse brings us, ideally down towards the 150s. This is probably very greedy of me to try and look for 120s. 150s, I think, would be more than acceptable for this market to play out with. But maybe we'll end up discussing a little bit more around the theory and the thought process for the Capital One short. I'm sure many of you will already be able to kind of ascertain that from the discussions that I've been having on Twitter this week in terms of shorting credit. But I think an area of the market that certainly represents, a little bit of risk and would be interesting to see any downside hit that. Okay, and then we'll cover off some crypto, and then we'll do some chatting and get through that side of things. So I'm gonna hazard a guess here, and I have no idea, but I'm gonna hazard a guess here that Trump's probably stopped speaking, which is why the market is looking like it is. The actual kind of like higher time frame view on BTC, and something that I've been, I would say, probably more proud of from a crypto side of things actually recently, has been not being involved in the chop. So I'm on a bit of a streak at the moment for not participating in chop. I'm receiving my non-participation award, which is a welcome break from where I have been over the past kind of like 12 months or so. So trying to stay away from the crypto side of things as much as possible in the shorter term, just because I don't think I have any advantage to operating in a market that currently looks like this. And while my alignment on this is also still leaning towards the bearish side of things, and even here, if I was just going to do like the simple TA approach here, it's RSI reset, hugely aggressive short squeeze that moves us back into a key resistance area at 92,000. Now we are still operating now under this level through here, which is a concern on the crypto side of things. I would therefore expect lower prices. Don't particularly like the view of it. And the 3-day, again, is the very, very simple way of kind of measuring this and seeing exactly what's going on here. The 3-day showing very, very clearly that 92,000 is a resistance for us, a very meaningful resistance as we get through here. And the crypto markets at the moment are in a position where what I want to see is recovery of key levels. And you can pretty much map those out across any markets, and you can also extrapolate out that thought process into kind of 2, 3, 4 months down the line as well, regardless of what happens to the price action. So what we're seeing at the moment is obviously weakness below a key level, and therefore for us to want to try and position into this, we'd want to see a reclaim of this level. When it's this important and this significant to us, we would want to see that level reclaimed in order to feel as though we are going to be able to, sit in our comfy long positions again now. And then the same when you look at markets like Sol. Sol's another market that really just represents the fact that we've got some key levels through here. We can delete this now. That we've got some key levels through here on the higher time frames, and that we need to see some recovery. And I can expand the thought process out a little bit for Sol to demonstrate what I mean about recovery of levels, even kind of from a future perspective if we look down here as well. So we've got a few levels that are probably important to us on Sol, and let's just take it from this kind of like wider view here, and we'll do it along here, and we'll do it from that bottom level, and we can delete that for now. So what we've got basically is the 180 resistance, and we've got the 130-ish support as well. So anything below 130, you can see over here, all of these wicks. Anything that goes sub 130 seems to be bought up pretty well, and we seem to be getting those closes, kind of around that region, 125 maybe. So we've got a situation here where we're trapped within this. Now, when we say we're trapped within this, now that typically, if we were talking about a 5-minute range and we were talking about, a $2 variation on Sol pricing, then sure, it's something that's a little bit more actionable for us, or something that, we might be able to trade with some more frequency. But with Sol, we're trapped in a range that is actually relatively significant. You've got a range that through here, you're looking at 30% downside to get to the bottom of that. And so it's a significant movement region that we have through here on Sol. Now, it's still tradable, But in order to be a buyer, we want to see probably two things happen. Number one is we want to see this hold of support here to feel comfortable that we can long this towards this region here. And then if we're really going for a swing trade, we'd want to see price trade back above this 180, reclaim that zone, and then we would feel confident we can head back up towards the 260s over here and start trading in this upper range. While we're here and while we're kind of hovering around a midpoint, there's no real reason to be executing anything on a market that looks like this. You know, there's no value for me to be sat there trying to pick anything apart from this chart. And then the downside thought process. Now, of course, given that we are trending downwards and we are in market conditions that are proving to be more aggressive on downside moves, if this level goes and breaks, you know, whether that be this week, next week, in 3 weeks' time, we just shift that level down. So now instead of looking for strength at 180, we can look for strength at 130 and any recoveries here. So if we get the market that then does this, okay, now we can begin to position into a 130 reclaim and we can use that as our sign of strength instead. What that's going to do is that's going to take out a lot of the annoyance and frustration of trying to trade the markets before you get any single sign of recoveries or strength. So it's going to give you that really solid signal that something has changed in the market. But what it's also going to do is give you a poorer entry versus trying to time a low. Now, timing a low is very, very difficult to do. Buying when you get strength is also very difficult to do because people will freeze themselves out and say, well, I could have entered at $90. Why didn't I? There's no way I'm paying $130 now. So both situations are difficult. Although in reality, one of them, the strength argument, is actually far simpler and better for account balances to try and action versus the one of trying to continuously catch any low that is made and trying to time that reversal perfectly. You still in your soul spot? Yes, I am. I don't know if this is the bounce to get rid of positions. Again, I think that's a difficult one to answer at this point in time. I don't think there's really enough information that we have, you know, kind of through these zones in order to feel comfortable that we should be. Although maybe the market is just as simple as BTC is acting as resistance at 92,000. Any bounces into that region should be opportunities to cut. And, you know, therefore, we are just expecting higher prices. You buy back if we reclaim 92,000, and maybe it's nice and simple. Really going to depend on you. You know, there's a lot of subjective thoughts in there in terms of how long are you going to be holding those positions? What's your time horizon? Do you really want to start bouncing around in terms of offloading spot, rebuying spot, and doing that side of things? Or will you look at DCAing, for example, and just bringing your average cost down by waiting for cheaper prices anyway, and you have additional capital in which you can put into the market at the appropriate time? Lots of different things that will equate to whether or not you actually want to move out of position or not. And just a quick one, as we haven't covered it off at the start, but like I said, this is a stream that's sponsored by Ostium, and Ostium do provide on-chain TradFi markets. List of markets were expanded this week, and so you can trade NASDAQ, you can trade the DAX, you can trade your FX pairings, you can trade the metals, all on-chain, all through Ostium as well. So if you do want to head over to TradFi and utilize some leverage and some on-chain funds to do so, you can obviously check out the link down below in order to get access to that nice and easily. Can you do hype next? Yeah, sure. Let's get hype up. A little bit of similarities to the way that the NASDAQ is trading through here, just with the divergence creation. I think that the last low on hype is particularly good here. I think that this one is like the cleanest one, because you also have the confirmation that this low is good. I would still like to see one more tap down. I would like to see us run towards this 14 region, maybe run 14s, and then try and reverse. So turn this into a triple divergence, give one more weak leg down, and then try and push this back to the upside. I think that for me would be the ideal scenario here. We've got this potential. We've got this like little build-up of supply, demand over here. You know, it's the last kind of 3 days of consolidation before hype actually began its very aggressive run to the upside. So my suspicion would be that this still is going to be a very attractive price point for people. And so I would like to see a significant reaction if we do end up getting down here. But at the same time, like I said, we already clearly have a bullish divergence here. And what you're doing is, if you're looking at positioning into this, I think you just have to be prepared that we could do this 14 run and create that triple. So you just need to be sensible in terms of where this stop loss placement is or how you structure the trade. You know, do you take 30% entry here? Do you take another 30% if we sweep? And then do you take 30% if we're really aggressive? Right? And you end up with a really nice average of, you know, kind of here. And therefore your trade automatically looks a lot better. You know, you're looking like this now. And we're probably looking for a trade towards 1870s. I think that's probably where we're looking for this market to move to. Need to remember that we are counter trend, and so it's going to be super tempting, like we discussed on the last stream actually, where we were discussing the implications of catching bottoms in downtrending markets and what that does to the mindset and the psychology of twisting it to believe that macro bottom is in and you should never close a long position, and then they very quickly reverse. And ETH was the primary example of that happening over obviously this week. So just make sure if you are taking long positions, be aware of the current environment and don't set your sights and expectations too high. There'll always be another reason to enter a long position. And taking profit is such a valuable process in that kind of trade activity. So if you just look at hype here, if you want to take a long off this region here and you say, right, well, I'm going to close this when we get to the 1860s, you know, that's going to be my full take profit. And that bags you a nice, you know, 25% trade. That's a monster counter trend trade to have played. Then if hype does this and ends up reclaiming this level, then suddenly you've got a brand new trade that you can play into, because now you're playing this. Okay, now you're playing the reclaim of this level, and therefore your invalidation is failing to stick that reclaim. Okay, and now you're looking for another trade, maybe back up towards 23. So there will always be another position when you use these types of areas for your take profit. So when it comes to kind of being fearful about taking profit, never be fearful, because usually if strength continues in a market or weakness continues on the short side, there will always very easily be another reason to take a trade. But it's far better in environments like this to lock in counter trend plays than it is to let them run. And like we discussed on the ETH side of things last week, right, this was like the exact discussion that we had. Divergences down here. We talked about moving back towards 2500s. People would think that they caught the bottom, and then suddenly they would round trip everything. And that's kind of the position that ended up taking place in the market. Yes, a load of narrative attached to that. A lot of the time there is when it comes to aggressive market moves. But also a really good example of the way that if you aren't taking profit counter trend, you can very quickly get punished when that momentum comes back in the direction of the trend. Man asked about copper. Yeah, I love that. I love the copper question came up. And I can also give like the really boomer answer here as well, which is like the monthly is the most important. Like, and I love saying that, because it's like, you know, this is the type of trade that you take and then you hand down to like your grandchildren, right? Because you want to see copper break out of this, and if it breaks out of this, then you're talking about breaking out of a level that has been resistance essentially for the last 15 years. Okay, so you like, when was the last time you played a 15-year breakout? You know, so we want to see copper close the monthly above this 480 region. We want to see a monthly close lock in above there, and if we get that, then copper's going to be in a really positive position for the months ahead. This isn't just going to be a trade that it impulses towards $5. You take full profit and you're done, right? This is like a 15-year, or if you want to kind of shorten things, a 4-year resistance zone. So if we get a breakout from that, that's a very meaningful length of time to be consolidating under a resistance, and therefore we would expect the move to be aggressive on the other side of that, and we'd be looking for far higher price targets. Where that is, I don't know. But copper shaping up really, really nicely, although it is by far the most kind of boomer-inducing market when I speak about it. It feels like it ages me like 20 years just talking about this market. And then silver as well. I'm gonna start getting like silver summer going on Twitter, because I think this sets up really well on the higher time frames again. Pretty decent weekly close for silver through here as well. So really good in terms of the recovery we had from this weekly candle and straight back up the other side of it. That's always good to see. RSI in a really positive position on the weekly, the 3-day, the daily, the 4-hour. Like everything is just at a reset neutral point, and we're looking to try and impulse higher. Current climate, kind of, geopolitical side, still makes a pretty decent bet. Gold still having a lot of strength through this region as well. It's done its correction through here. It's traded down, 6% off the high if I had to eyeball it. All right, 4. Damn. 4% off the high, and already starting to crawl back up the other side. Price discovery mode, divergence. Copper looks like gold 1 year ago. Yeah. Yeah, that would be an ideal run through. Then SPX, and obviously this market, we've already covered off the NASDAQ, but just mirroring the NASDAQ in terms of the way that this is being created along the lows. So we're still actually having our higher lows through here. The price action has been very aggressive. It cannot catch a break. And we're looking for something to try and squeeze probably towards 5,900, just for the round number to quote through here, and to play out this divergence. Again, you can see that on the Awesome oscillator as well, just mirroring it through here and looking for that impulse, hopefully next week, to try and give some upside. If these divergences end up breaking to the downside, super negative position for us. It's really, there's gonna have been something that has happened or been said that will cause these breaks. Otherwise, like I said, I'm looking forward to hopefully a greener start to the week next week and give some relief from what we've seen on the sell pressure for what feels like fucking eternity now. Feels like every time I talk at the moment, it's like always about downside, bad things happening. Can you tell us more about Ostium? Are the fees and spreads on the same level as top tier CFD brokers? And then we also had a point from... Oh, and David, I'll come to you as well, because you mentioned the ENA side as well. So I want to cover that, because that's a really good looking chart as well. So I'll come back to that in a second. And then Mysterious Stranger said about Ostium looking great. So yeah, when it comes to like fees and spreads, you can check everything out from inside the site. I don't want to speculate against the kind of the top CFD brokers, but again, remembering that you are trading on chain, and so therefore there are advantages that come with that, and then there are compromises that also come with that. So from my perspective, I've had a really positive time in terms of trading on there. One of the big things is obviously the access to leverage as well from an index side of things. And so being able to trade the index is actually on greater leverage than I have access to through CFD brokers is actually super helpful as well. So I said all you can do is just go check them out. ENA, while I remember and before I put this Zin in. Yeah, so essentially what you've got is like the long running div again. But it's like never ending. It's like never ending divergence. The RSI is starting to just like curl up completely. And this last low here really looks as though it was kind of the final shakeout in terms of this price action. This price action here is very just kind of market structure heavy. You can see your highs and your lows and your lower high and your lower lows. And then you get this area here where things just go like, you know, all sorts of crazy fuckery when it comes to Sunday. And then we sell off immediately on the Monday. And this low here in particular looks like the one that is the fake low. It looks like the one that was the last shakeout. And hopefully now we'll get some squeezing against this in again a meaningful way. And when we're looking at targets on something like ENA, I think we're looking for things that are, you know, just high based. And we can take a candle here, take the candle here, and we're just looking at playing into how far can we get in terms of squeezing against these highs, because they haven't really been run. Okay, this is the only time that we've run some highs here. And so now we're looking in a situation of where can we get to in terms of running these highs. And this would be the ideal spot. This would be the very aggressive move, because what we like to see when we get divergence playouts like this as well, the best short squeezes or the best squeezes for any direction tend to run the origins of these moves. So we want to see this move here. I've done lots of discussion recently on kind of the when you get strong market move and then the price action changes and we get into the grindy uptrend, and then we get a sell-off that takes out all of this and then bounces very quickly into this again. And this is just the reverse of it. Okay, this is a very aggressive price action. You're choppy back and forth. You want a move that attacks it, and then you probably continue the trend. But really good higher time frame divergence setup on ENA. Actually very similar in terms of the reaction to Fartcoin. And again, this divergence here being very, very similar. And this divergence is also pretty interesting on Fartcoin, because this one is one that if you look at the position from an awesome oscillator perspective, a price action perspective, and an RSI perspective, they basically indicate the momentum should be coming imminently. Like, that's not to say it's going to happen in the next 3 minutes, but when we're looking here on the 12-hour candle, we should be expecting this to move within sort of 48 hours. This should start having some pressure to the upside if this divergence is going to play out. Because this awesome oscillator is so close to crossing, the RSI is in a good position, and now market structure is fighting to try and hold a low at a former support level. So we've got a whole range of reasons to believe that aggression should be inbound, and now it's just waiting to see if that takes place. Maybe the weekend cools things down a little. Maybe it doesn't go then. Maybe the week starts off positive. Maybe we actually get some positive news that sticks around over Saturday and Sunday. Silver looks like BTC around 30K prior to the all-time high run. Holy shit. Silver summer. It's really here. Yeah, people complaining about the chop and other stuff. You taught me that it's just about market selection. You call it boomer shit, but the metals look so good. And also Fartcoin gave me 100% in 1.5 weeks. Yeah, so market selection is really important. And, you know, you're right. It's like it chops around people. The problem with the chop and the problem with that area is that people want to utilize leverage, and that people are also typically in poorer mindsets when it comes to trading chop, because they're usually in kind of get back mode. They're usually in clawing back losses mode, which never, you know, we know that doesn't end up, you know, working out well. But really the alpha is, you know, what you've said. It's identifying the right markets, and something like Fartcoin is something that I sit here regularly now and say, look, if you want to actively trade a market, this is a great market to trade because the volatility is monstrous. you can take far smaller position sizes and get paid out significant sums still, just because of the degree that this market moves. You've also now got a really nice kind of bullish signal on it as well, which potentially also gives you some more confidence to trade it maybe on a slightly higher time frame. But yeah, you're right, absolutely market selection, which is why I've been gravitating more towards TradFi again. It's why I've been trading the TradFi side of things for the last month or so, because the market there is so independent for certain areas that it just enables a greater breadth of selection versus where we've got things that are so tightly wound on the crypto side. Plus, like I said, right now I can't operate in this market knowing that Trump is using this as his kind of play toy right now. And it's so abundantly obvious and clear that that's what's going on anyway. You know, Trump uses these markets in general, as a personal sign of his success and how he is being received. And to go ahead and start dropping that shit on a Sunday, on the most illiquid day in the markets, to go ahead and start dropping everything, it's just such a blatant and obvious, like, this is my play toy, look what I can do moment. And then obviously for the fact that to just violently reverse on the Monday is also just so fucking typical crypto, man. Yeah, still in CHWY. I picked up a couple more positions recently. And I think there's a question here about kind of, can you take a look at WBD and how do you manage higher time frame bulls on individual stocks when the indexes are in a negative higher time frame position? And so this can also go some way to kind of actioning that, Troy, through here, where I've taken a position in Nike here. Like I've taken this and I've been sat in this for a while when the indexes have been trading lower, but this has held up really, really well. So this is a really decent looking market. And the same with Uber. I've been in Uber for a while now as well. And yes, we've had some correction from the high it made at 81, but it's still hovering around entry, even with the indexes performing more poorly through this region. So once again, that show of the independence of these markets and still playing the setups that you're finding, and WBD is through here. And I think that this is a market that we discussed a long time ago, right, from a higher time frame perspective. Monthly divergences through here, weekly looking in a pretty decent spot. Good reclaim of this level. Basically it looks like the monthly on CHWY, which we'll go over to in a second, but you got a pretty good reclaim of this level through here on the weekly. This is your time spent below. This is your divergence region here. Both AO and RSI diverging heavily down towards the lows. And now getting that bounce up here, trading back into this zone, using it as support, and then hopefully bouncing away. Again, with this sort of setup and the way that this looks, I think you just continue to play this market independently, regardless of what the indexes are doing. And the other side of that is that from an index perspective, there's always the outcome that we're just wrong in the analysis on the index. We're just wrong on the index analysis, and maybe the bottom is in. And so therefore, this is going to be fine. Yeah, and then CHWY is largely the same. Just higher time frame perspective. This was the monthly reclaim through here. Spent months below the level, very aggressive recovery back through, held the level on the retest, closed the monthly very positively after trading all the way back down at 20. And yeah, just cooling off now on the higher time frames. I think the weekly is still decent. Maybe some concern over the Ostium oscillator, but the fact that the weekly RSI pierced into here and is now correcting to the 50, I think it's a very good sign for this market. If it trades back down towards this level here at 25, I think it will just be more opportunity anyway. And then NVAX. Strong end to the week. Looks in pretty decent shape. It looks as though it can certainly move again through here. 3-day setting up pretty nicely. Weekly chopping around, ideally probably closes above 930 are probably going to be kind of confirmatory factors on a weekly time frame. So skip the 10% and then take advantage of whatever happens after closes above there. We can just continue to trade BTC Chop. Nice. You put WBD on my radar months ago. Big winner this year. Thank you, man. And congratulations to you for actually actioning it and taking advantage of it as well. So nice job on that side. Invoice will be inbound with the percentage cut that I'm required to take now as well. But good job. All right, so we'll do like 10 minutes of questions or so, and then we'll wrap up. What a week again, though. Thoughts on the non-event summit? Just a fucking non-event central, basically. I think last night was over-egged again. It was like a classic Twitter build-up of information. I think last night was a hugely bullish event from a crypto perspective, yet was treated as some sort of negative outcome because individually people's bags didn't pump. And the way that I was phrasing that, like I tweeted last night about it, but the way of phrasing that is basically when the Democrats were still in power, one of the major concerns that we had on the Twitter side of things was that the Democrats were going to dump their holdings. Like that was one of the that was a genuine concern. We were worried about Bitcoin price movements from government wallets. We were concerned that the US government would start selling. And then as it came to kind of the end of the Democrat reign, then there was also a real concern of like, are these guys going to fuck things up by just offloading the Bitcoin prior to Trump getting in? Right? When he's put the kind of the pro crypto stance together, are they going to take this as the final fuck you and dump everything? And they were very genuine concerns that Twitter had. So for actually the assurance that now that BTC is locked up and isn't going to be sold, that's a really nice little patch of supply that's just been removed. That's a nice gray cloud that's blown away from over our heads and we don't have to worry about anymore. And it's also that the US has now set up a fucking strategic reserve for Bitcoin. Like, this is the fucking currency that you use to buy drugs. This is the currency that you use to play video games. This is the currency you were using to buy fucking in-game cosmetic items. And now suddenly the US government has a reserve of Bitcoin. It's a monstrously bullish shift in the just general tone and nature of this market. Yet, because of the current environment and because of Twitter, we've spent the last 2 months waiting for this announcement. And not only have we been waiting for this announcement, but there's been this intentional self-driven creation of stories about what it is to have a reserve. So like buying Bitcoin and, buying all of these other things. And suddenly we expected it to become this event where when it's announced, then suddenly everything's going fucking crazy in value. The reality is that they had the reserve, right? They had the reserve. That Bitcoin that they hold, that's the reserve. They don't need to go on a spree. But it's also true that now the US government has Bitcoin. That's a monstrous, monstrous thing. How much do you think Trump's budget and the Fed's next move are playing on crypto in the wider market? I think the hi Simon as well, by the way. I'm good, thank you. Okay, so I don't want to get too into kind of the politics side of things, but I've thought for a while, and super weird timing as well. Avi tweeted about this yesterday, and I had the exact conversation with a friend the night before, literally word to word for what he tweeted. I think the bigger problem that Trump has right now is not necessarily on kind of what's been going on. It's on the actions that he's done and is going with at the moment. So like on the tariff side of things and on the discussion of kind of trade war side, in the post-COVID era and during COVID as well, that was the one thing the market was very nervous about. It was the trade war era. Okay, there was like lots of potential for trade war to rise to the surface, and that was what made the markets nervous. Anybody trading during that patch of time will remember kind of trade related headlines being the big ones. What Trump has done and what is scaring the markets and spooking the markets and causing the uncertainty is, instead of individually targeting countries, so by saying, hey, do you know what? We're going to put tariffs on Canada, right? And dealing with that. Okay, saying, right, Canada, you've got tariffs. Here's what we're going to do. We're going to sort that out. Fine, you're done. Okay, cool. Well, now you're done, Canada, and we've kind of sorted things out and we've come to an agreement. You know what, Mexico? Actually, you need some tariffs too. So we're going to put tariffs on Mexico as well. And you take it step by step. But what like Trump did is Trump has attacked everyone at once. So he said, fuck you, Canada, fuck you, Mexico, and fuck you, Europe. And the problem when you do that is that when you isolate Canada for tariffs, right, maybe the UK don't want to get involved in that because actually we don't want to piss off the US. Right? We don't want to say, hey, actually Canada will sort you out because that might actually piss off the US and we don't want to break our trade agreement. When you piss off everyone at once, well, then everyone is just going to turn around and help each other. All right. So there's no issue now with Canada helping Mexico. There's no issue now with Mexico helping with Europe. There's no issue with Canada helping with Europe because you pissed everybody and isolated everybody off. And so instead of creating a situation in which the US is a required part of the trade structure and nobody wants to run the risk of pissing them off, you just isolated everybody and then they'll work independently against you. And I think that Trump set his stall out way too aggressively that the markets were also comfortable with. So I think that what Trump did is he moved too fast and too hard, despite keeping his election promises, which I think is notable and a very positive thing from a political perspective in comparison to what we usually see from elections. But I think his tone and his way of doing things has been too aggressive. And I think you see that in the fact that it's like, hey, we're going to do tariffs. Oh, now we're not going to do tariffs. We're going to delay them for a month. Actually, fuck that month delay. We're now doing tariffs again. I think there's like real mixed messaging. And I think that spooks the markets quite heavily. Like, I think that is a problem right now globally for the markets, that there's too much aggression from the US and there's also now too much flip-flopping, like trying to find that balance. And I think that Trump will get there with finding the balance, because I think there is, is a fine line to be walked. You've got to be harsh enough to please the American people that they're getting the best end of the deal. But you've also not got to be too harsh in terms of alienating yourselves as a country and essentially forging alliances all around you because you pissed off one group of people at the same time. So for me, that's the bigger problem with the markets right now. It's actually Trump's approach in general, which is more of a concern. And I think that's why when we've had the tariff discussions and the market reacts so aggressively, I think it's the heavy nature of the tariffs that are actually more kind of a stronger reason for the negative price action so far. I also love the way I said, like, I don't want to talk politics too much, and then just spent 5 minutes giving my overview of the political situation in the US. I think it's a relatively fair summary. And somebody who's not particularly biased on kind of, you know, any political side apart from how it impacts my bags. Politics stream soon. Yeah. I'd like to go into politics, man. I think I'd enjoy that a lot. I think I just enjoy, like, you know, this kind of mildly educated debate once in a while. Then I could really fucking try and pump our bags. Yeah, it makes sense. Yeah. Essentially, like, Trump should have isolated countries one by one, taken a slower approach, and not pissed everyone off at once. So maybe we'll see some movement back. Maybe we'll see some kind of, like, you know, slowing down on that side. But all right, well, listen, that was a nice way of ending things. So now that I am officially far more comfortable in the new house and things have settled down and we are live and set up with new streaming equipment, new office, everything working out, and time will be freed up, we'll be back to streaming. This stream will actually be on a Wednesday. We'll actually be doing Wednesday when the markets are open. This was just the time slot over the last 2 weeks, obviously busy with the move. And so this has been kind of a little bit chop and change with time slots. This will be a Wednesday afternoon when the markets are open stream, which means also we'll be able to catch anything, any kind of like major Fed stuff will also be occurring on the same day. So we'll be able to get into a little bit more discussion on those sides of things as well. Big thank you to Ostium yet again. Please check out the link below if you want to sign up and trade some TradFi on chain. Highly recommended to do so. I will be back next Wednesday with this stream. I will be back producing content now in the Haven. Now everything is set up and working wonderfully with the microphone and with the recording setup. And I will be back live streaming both at the Foundation and the Haven as well. So plenty of places to catch me, although Twitter is not really the place at the moment, given my general staying away from Twitter. Although I'm active in posting, I'm not really browsing or engaging too much there. Although weirdly, my followers have grown quite aggressively. So I don't know if that's what the market has been telling me, is like just tweet less, but make better tweets when you do. But yeah, I'll be in the usual locations over the course of this week. Thank you so much for joining me tonight as well. It's really nice to speak to everybody again and round off the week in this way. Hope that you all have had a good and profitable week. Take some time off this weekend, maybe. Have a wonderful weekend. Enjoy some time away from the screens. Best of luck if you want to stay inside and go trench mode on it. And I'll catch you guys on Wednesday.